You're listening to the Grow Real Estate Investing Podcast, an intelligent real estate investing how-to community where we break down the sometimes complicated real estate investing techniques into straightforward, simple to understand, and easy to follow components. No schemes, just the well-exercised foundational basics of real estate investing. Join us as together we dive into the world of real estate investing success and further release the real estate investor inside.
Hi, I'm Joe White, and this is the Grow Real Estate Investing Podcast. I hope you don't mind. I'm having technical issues, and I can't get my microphone to work to save my life. So I thought I would just use my computer and the mic on it, and I hope it works out. I have a feeling the quality is going to come out pretty badly, but hopefully the message will be okay. And I actually went ahead and placed myself down on my couch in my living room to do this. So, I got a couple apologies for that. But last podcast, I began explaining why real estate investing has such big advantages over other forms of investing like the stock market. We began talking about the powerful dynamic of leverage. Leverage alone blows other forms of investing out of the water, and it's a very big, very exciting mechanism that real estate investors use. But like most things real estate investing related, it's also a very simple concept and extremely easy to implement. Definitely check out that podcast in the article guide. I'll post a link in the notes here for you. Today I want to talk about a second superpower that real estate investors have over other types of investors, and that is the tax advantages. So just then when I said tax advantages, everybody watching or listening just moaned. I understand that, and I understand that tax advantages might not be flashy, but it's an even stronger wealth generator than the exciting power of leverage is. Think of tax advantages as leverage's quiet, smart older brother here in the real estate investing family. The power behind real estate investing is, bottom line, that the government wants you to invest in real estate. Our economy is built upon you buying real estate, and they will give you a big pile of rewards if you do it. In fact, our government wants you to invest in real estate so much that the laws are set up for real estate investors to avoid paying taxes altogether. So tax advantages is like the quiet, book-smart older brother. I say that because tax advantages might be big wealth generators, but they still fly under the radar, even though the advantages are considerable and they come with very big returns. So big that on their own, tax advantages make real estate investing well worth it and beat all forms of investing all by itself. But tax advantages run under the radar because most of us don't see tax as something that we should owe. Rather, we feel that someone is taking our hard-earned money. So when we somehow magically don't have to pay tax, we tend to not appreciate the fact as much as we should. Leverage might be the flashy little brother who catches our eye. He's driving a sports car with his bold earnings, while tax advantages is like the brother with his face in the ledger, always crunching the numbers. He's the one you should have married. He's the one your mom wanted you to marry, but you went after the sports car. And that's okay. Leverage is no slacker, and he's also a whole lot of fun. So I get it. But, even when we hear investors talk about the huge wealth power, superpower that tax advantages offers us, their tone's not all that excited about it. Many of us use these tax advantages, but very few of us truly appreciate them. And given the benefits, we really should appreciate them because this is a crazy amount of money and it's a very nice return on investment. So what are the tax advantages of real estate investing? First, I'm not an accountant. I'm not a financial advisor. I'm not an attorney. I'm not a doctor, nor am I an Amish baker. I'm just a real estate investor who thinks he knows stuff. Talk to them. They will make you money. They will cost you far less than they will make you. First, deductions. Real estate investing is a business. If you own just one rental property, the IRS will see you as being in a business. And that gives you the ability to deduct expenses relating to that business. The tax, the insurance, the mortgage interest, the operating expenses, all the repairs to the property, the fees to manage the property, basically anything needed to manage that property. Mileage, paper, pens, the percentage that you use your home for an office, your internet connection, your cell phone, so on and so on. These are all tax deductions to this business. Next, there is depreciation. Depreciation is where the government acknowledges that things in your rental property are going to eventually break. So they pay you for that up front each year, even though they already paid you for those things as business deductions. So these are basically phantom expenses. You're actually getting paid twice for these. So at this point, the government is actually paying you to own real estate. Third, you don't pay FICA nor self-employment tax. Real estate earnings are generally taxed as earned income like a 9-to-5 job. So there isn't the 15.3% tax that you and your employer share. So you can add another 7.65% onto this tax benefit pile. Fourth is refinancing, or what I like to call tax-free borrowing. Say you borrow $100,000 to buy a distressed property. That costs you around $50,000 to buy, and you have to put another $50,000 of strategic improvements to now make it worth $200,000. You can refinance the property, pay back the $100,000 you owe, and take an extra $75,000 income, tax-free. Next is the capital gains. Long-term capital gains or short-term capital gains are the tax that you pay when a property is sold. Now, if you're a buy and hold investor with a rental property, this really isn't much of a concern for you, and that's why we love rentals. But if you are planning on selling the property, there's a mechanism in place called the 1031 exchange that will help you to defer paying taxes. Again, the government is trying really hard to reward you for investing in real estate and building up the economy. So done right, this can help you avoid taxes indefinitely. Let's say till maybe, after you die. So 1031 exchanges are extremely interesting, and interesting enough that we'll save it for another podcast and we'll give it its own article guide. So keep an eye out for that. But for now, the first reason that real estate investing beats other forms of investing is leverage. And the second reason is that most rental properties don't pay tax on the rental income. I want you to think about that for a moment. Maybe think about it when you're opening up your next work paycheck. So take a moment to look at all that tax that was taken out of that check before it ever touched your hands. And then ponder if you think the tax advantages of real estate investing catches your eye. And for those of you that already own investment property, the next time you're racing on the highway in your sports car that leverage bought you, take a moment to think about his older brother. Happy investing, everybody.